Amid the significant rise in global crude oil prices, total borrowing of oil firms in the downstream and upstream sectors of Nigeria's oil and gas industry from banks increased by $470 billion from 519 trillion naira in January 2021 to 5.68 trillion naira in December 2021. Going by the latest report from the Central Bank of Nigeria, operators in the downstream natural gas and crude oil refining subsectors had borrowed 290 billion naira from Nigerian banks in 2021. And the figures continue to soar as a result of pipeline vandalism and oil theft being experienced by the operators. This development, according to the report from the Apex Bank, has made the country lose out, now carrying more revenue in spite of the current high price of crude in the international market, hereby posing threats to the ability of the operators to meet their debt obligations. Let's understand what this means and the impact of this on the stability of Nigeria's financial sector again. I'm being joined in the studio live by an investment strategist at AfriInvest Assets Management Limited, Mr. Temitope Omoshuyi. Thank you so much for your time.
Thank you for having me.
Yes, we've talked about vandalism and oil thefts to, the impact on the oil and gas industry and that. But now on the financial sector, pushing banks or borrowing to about 5.68 trillion naira. You are an investment strategist. What does this mean for us?
Well, I think the first thing is this. Financial sector is very important for every economy. As a matter of fact, I will tell you that if you want to destroy an economy, right, the magic wand is to distort the financial system. Sector. So it's actually very important. So if you now want to trace it to what is happening in the oil sector, and it's very important to know that, everybody is attracted to the the eagle that lays the golden egg, which is the oil sector. In fact, if you work in the oil sector, you become the big boy, which is why even if you get contract, so for banks that get contract, have deals with the oil sector, they are also very buoyant. So which is why they are heavily exposed to the sector. For instance, in 2017, right, the sector in terms of credit, banking sector credit to the oil sector was about 25%. This increased to over 30% in 2018, and it's as a result of, because we had a respite after the economic recession of 2016. We're heavily exposed in 2016, which was what led to the increase in NPLs, non-performing loans of banks in 2016. It went to as close to 15%, above the 5% threshold. So it's actually very important that we look at what is happening, in the oil sector, particularly when it comes to vandalism. So, the issue of vandalism has been a problem in Nigeria for as long as we can remember, but I think it becomes prominent and it's on the front burner now because of the fact that it's taking a toll on the revenue and it's now significant. The point is this, if oil prices were low, we wouldn't have brought this to the fore. But it seems we all know that oil prices cannot remain high forever. As a matter of fact, we know that when a commodity becomes attractive, it brings, it attracts other investors, it attracts more people to the market. We are saying now that supply constraint is what is driving prices. But at some point, countries will look for innovative ways to join the oil sector in terms of supply. So it won't last for a very long time. So I think, which is why, the concern is there that what is happening in the oil sector, we have fed the banking sector, and it will also take a toll on the economy. As a matter of fact, because the sector is heavily exposed, the banking sector is heavily exposed to the oil sector. In a way, it's a barometer of what is happening to the financial sector. For instance, government is heavily involved in transaction, in economic activity in Nigeria, and we all know that government rely on oil earnings, right, to drive revenue. So if government is not earning so well, and government does not inflow money to the financial system, that could affect, it could affect the economy a lot. But before I even go into that, it's quite disturbing that a number of companies are, suspending production from the shell, so they are all of that, is costing, the economy a lot, which is why most of these companies are now pushed to the banks. They are being pushed to the bank because their operating cost is now very high due to one, they are providing their security. You know, they have to secure the transnational pipeline. They have to provide security. That alone has added to their cost. Plus, the fact that government is not getting so much of revenue, because before now, the joint venture arrangement in the oil sector, government is expected to contribute 60% when oil companies want to explore new areas. But now, because government is even struggling, they are not able to meet up this agreement with joint venture. So they have to run to the bank for obligation at every point in time. But the problem is, as they are making investment in this sector and they are not getting outflow, it becomes a problem on their cash flow, and at some point it could take a toll on the bank. So I think we have to just begin to look at how to address that now than ever, because like I mentioned on the point that I started with, the economy is highly connected to the financial system. For instance, look at what happened in the great financial crisis of 2007 to 2009. It was just a sector of the economy, and it affected other sectors. For instance, if oil sector or oil sector players are not able to meet their obligation, which means you and I, when you go to your bank, you won't be able to withdraw money, which means banks will not even be able to advance credit to other sectors of the economy. Automatically, they want to raise their risk credit assessment standard because a sector had already failed them. So all of this will affect the economy, and in a way, it will bring about a slowdown. And importantly, because we are not earning so much from foreign earnings, right? And it's taking a toll already on the foreign reserve. You see that the accretion is not as impressive. It's on the back of what is happening in terms of the vandalism and the oil sector. So which means if foreign reserves is not increasing and exchange rate is pressured, oil sector companies import most of their input, and they will take, some of them must have taken obligation in foreign currency. Forex, so as foreign reserve is declining and pressure is on FS, which means they will find it even difficult to meet obligation, to meet their their hard currencies obligations. So all of this could actually compound the challenges in the economy. So there are other issues, even indirect impact, because one of it is what I mentioned, which has to do with even the view of the country. If the financial system is not strong, it will also affect the government. If government wants to go out there, go to the international debt market to borrow money, and even in fact oil companies and even companies generally, if you want to go out there to borrow money in the international market, and your financial system, domestic financial system, is not stable, then it's going to affect the way international investors will actually see your country. So all of those are quite complex right now, and I think it has to be addressed.
But when we talk about that, the oil and gas industry, many will still tell you that we need investment in that space, and that's why we have the PIA, which we expect that will spur up more investment. But looking at investment, what do you think? Upstream, midstream, downstream, where do you think needs to be the focus at this time?
So it's quite important that we could look at the value chain from the midstream, the upstream, and the downstream, right? Although I would say that the upstream is actually very attractive now because of what is happening between Russia and Ukraine. But it's quite saddening to know that capital importation to the sector has declined significantly from over 700 billion in 2017 to less than $100 billion, million dollars to be precise. $1 million in 2020, and it's about just a little above 100 million in 2021. So which shows that foreign investors are concerned about some of our policies and the environment. The PIA has stated, has actually made the sector quite attractive on the paper, but we have to implement what we have put in the PIA, because an investor cannot put money where security is of the essence. You couldn't have committed billions of dollars into physical assets. You can't take it, which is why even when the Nigerian economy recovers substantially and there's a level of tranquility, we will get more of foreign portfolio investment rather than because when you commit your money into fixed assets, you cannot take it away easily amidst insecurity, but you can easily sell off your stock, sell off bond and treasury bills, all of that at the slightest possible crisis. So which is why we have to look at the value chain, not just the we know that the Dangote refinery is helping on the one hand, but we also have to look at the value chain, because it's better to keep optimizing. Optimization is the rule of the game. It's better to get 100 than getting 1. So why can't we, if you have the opportunity to optimize across both upstream, upstream, and it's very important. Now
Beautiful
that
stuff.
the prices are even high, I think it's always very important to really optimize the benefits.
Gas is also something that interests me, particularly at this time too, when we're looking at keying into the opportunities abound in the war between Russia and Ukraine. But many will say that we lack that infrastructure. So I was thinking, don't you think that people will also want to get more investments, and that will lead to borrowing to invest in gas infrastructure?
Well, borrowing is never a problem if investors can see a clear roadmap as to how the investment will yield
returns,
and it will be protected, not just in terms of security, in terms of policy stability. So investors will look at for all of those, and like you have rightly said, the opportunity now abound. For instance, what is currently happening between Russia and Ukraine. Yeah. Russia supply over 40, 50, even 60% of what European countries consume. So a lot of even investors are looking for where to just invest when it comes to natural gas, because they will, in fact, because of this crisis, a lot of countries are beginning to look at how to re-strategize, reduce dependence on a country, so that whenever there's such a global crisis, they will have different sources. So I think for now, we have to begin to address, like I've always been saying, that security is of the essence, plus macroeconomic stability. If we don't have that in place, if security is not addressed, the future is actually very gloomy.
I tell you, because in that report, it shows that about 150 illegal tappings were used in siphoning crude from this TMP. Many will say that this is not just being done by just anybody. It's like a cartel. It's like a group of people, and they are professionals, because it cannot just be done by just anybody. But that's on one side. I'm also thinking that as attractive that the oil and gas sector is, and investment banks are putting in so much money and commitment, I'm looking at the ICT and technology space. It's also somewhere that I think that banks should also be exposed to. What do you think about that?
Well, so starting with, even before I move into the ICT space, starting with even the current vandalism and the fact that when I listen to people, that this thing is not a concerted effort of some people, because over 300,000 barrels, that would take about 10 to 15 trucks. So these are not pins. They are not so tiny. They don't
just go like it's not just a piece of paper.
And oil analysts have even made us to understand that for every molecule of oil in another country, there's a way you can scientifically trace where the oil is explored. So it's just because we are not so ready. We are not the only oil exporting country in the world. We are not. In fact, we are not in the first 5. So once we are ready, we would find the right solution, and it's going to work. So we don't need to create any solution. In fact, if you tell me to come up with recommendation and all that, all I need to do is to go online. There are so many recommendations. We have case studies everywhere, because this is not. It's not like adoption of cryptocurrency that you have just. You don't even have countries that have really embraced it. So that's on that part. It's quite difficult to say this is how we want to go about it. But in terms of oil, preserving the oil sector and optimizing benefit, there are so many case studies. So once we are ready, I think that we will find a way around it. Why, when it comes to the ICT sector, there's no better time than now for government to be heavily involved. The banking sector is actually, it's not even about what you think. It's not on your volition. If you don't want to be innovative, you will be distracted. In fact, as a matter of fact, you will see that banks are becoming extremely innovative, because fintechs are challenging them greatly, and because of the increase in prices, inflation is rising everywhere in the world. So the only competitive strength of company is cost. If you're able to bring down your price, because products are homogeneous. Check whatever you get from Access Bank is what you get from GT Bank and all that. So the differentiator is cost of transaction. So the only differentiator which is helping to bring down cost of transaction is technology. As a matter of fact, you see what Diesel is doing to bank branches. They are closing down branches early, but they will not close down the efficiency of technology. What they do is increase the technology efficiency, while physical, traditional banking system is now reducing. So, which is why, in terms of making it now, because in a way it will continue to create a kind of inequality actually, because part of the world, or this the country that is not exposed to telecommunication, electricity, will continue to be on the sideline. So which is why on the part of the government, so as to enhance financial inclusion, we have to now begin to look at infrastructure, so as to bring more people into the financial system. But technology across all sectors of the economy is the differentiator. In fact, is the even it's becoming difficult for government to even meet obligation. For instance, ASU is on strike. What the only differentiator, what is helping so many students to stay afloat is what? Technology, because they have access to internet and they have access to online classes. So I think as banks are embracing other sectors of the economy, should also at all costs embrace technology, because other traditional way of doing business are becoming highly expensive, and products are becoming highly homogeneous. The only competitive strength is price. If you are able to compete through pricing, through cost and all of that, you are better off and you remain profitable. Otherwise, the exit is very near for that company.
Wow. Let's wrap up on this thought. All of this sounds a little bit like more of threats, more of opportunities. That's for the financial sector and all of that. So what's your projection? Will all of this reshape some of the earlier projections we've had for the financial space across the globe?
So it's quite interesting to know that when there are disruptions, in fact, market analysts understand that when there are volatility, you make more money. But when things are just stable, like prices are just stable over a period of time, you won't make so much money. So what I'm saying in essence is that when there are disruptions, it creates new opportunities. As a matter of fact, we are seeing for both consumer, even and the service provider. So the most important thing now is for the players in the sector to begin to spot opportunities. There are no challenges without opportunities. We know technology is disrupting, right? But it's telling traditional players to begin to rejig their strategy. Don't focus on the traditional brick and mortar system and begin to expand beyond just the shore of your country. You can expand to other African countries. A number of banks are currently doing that because there's now financial service providing financial services is not limited to a sovereign anymore due to technology. So I think the future is very bright for innovative companies, and it's going to be it's going to be very difficult for companies that is hell-bent on holding into the traditional system of doing business.
I must thank you so much. Interesting conversation with you, Mr. Temitope Omoshu, who is an investment strategist at AfriInvest Assets Management Limited. Thank you very much for making real sense of this topic of discourse. I appreciate your time.
Thank you.